What's good, fam? It's Mike back with another video. And in this video, I really wanted to discuss how important it is trading one or two pairs, man. Or really just trading one pair in general. But it's just like, when you got a girlfriend, man, or you know what I'm saying, or you one of those guys that just go from girl to girl to girl to girl to girl. Listen, man. It's stressful doing that. It's stressful. You're going to stress yourself out going from girl to girl to girl to girl. Why not stick with one? You know her, all the way ins and outs. You know what makes her upset. You know what doesn't make her upset. You know what makes her happy. You know what she likes. You know what she loves. As if the other guy, he's got to go from girl to girl to girl to girl. They got different personalities, different things that they like, that they do. And you don't know. You don't know. You fidgeting, you scrambling around. So this is the same thing with trading, man. So anytime you got, whether you're the person that trades cryptocurrency, you like trading the indexes, you like trading commodities, you like trading metals, you like trading FX pairs, whatever you trade, you want to narrow down that pair as much as possible, and you want to understand everything about it, how fast it moves, how volatile it is. You know what I'm saying? How much you can get out of one candle off of a move. How is it move easily with structure, or does it consolidate a lot? So these are the kind of things you want to kind of narrow down when you're trading. So before we even get into the good stuff, you already know what to do. Make sure you please comment, like, and subscribe for your boy. Turn on that notification bell to become a part of my notification game to know when I post new videos. Good content, great content every single week. So don't miss out on it. So let's not even waste time, man. Let's get right into the video. All right, guys. So what you actually see on my screen, these pairs on the right, these are the majority of pairs that I trade the most. These are my favorite pairs. I like to get different moves and off of these particular pairs, depending on what position and what particular location they're at the particular time. They have to be at a significant area for me to take advantage of them. But if they're not, I usually just wait until, the opportunity presents itself to be able to get into the trade. Especially GJ. I know you guys have really heard me talk about GJ a lot. I even have alarms set. I'm probably going to do a separate video on that, on how you can set alarms and alerts. But I've completely broken down GJ to the T. So when I say break it down, this is where I just understand what GJ is doing and where I feel I can trade it within the next move. And when you narrow down your pair and you have it marked already and stuff like that, it's going to help you especially understand, okay, well, next time I come to the charts, I'm going to be able to understand that when price gets to this level, I'm looking for this to happen. Or when price gets to this level, I'm looking for this to happen. So this is what I like to do every single time, even if I narrow down. And I wanted to really leave this on here for you guys so I can show you guys how I basically broke down the pair. So if we go to the monthly time frame right off the bat, I knew this was a significant area where the monthly was, especially just from this tip of this wick all the way to the body of the candle right here, and along with the other wick as well. I knew this was a significant area. That's why I did end up marking it. And then I went down to the weekly. I like to keep my significant areas of support and resistance a color that I know, that I understand that, okay, well, Mike, is getting to this area. You can look to see, how price rejects or breaks through this area to see if you can get an opportunity to enter in. And as we're going down the time frame, now we're on the daily time frame, and I'm going to show you guys. I'm going to take the fib off for a second. I want to show you guys what's been happening. You can tell out of these areas, price was heavily rejecting. And you see, this was actually an area of support and also resistance. This was a nice area. This blue box right here was a area of price action that I actually got off the 4 hour. This was the daily. This was the monthly. And I believe this was the monthly or weekly as well. But these are still higher time frame areas, whether it's monthly, daily, weekly. The green is the higher time frame area. So what I do, I'll scale down to the 4 hour. And now I definitely see what price is doing. What I'm going to do here, I'm going to take off the moving averages just so you guys can get an idea of what's going on. And you can see exactly what's going on. As price got to this daily resistance area, it kept rejecting it. Even right here, it kind of faked us out. It showed us that it could not break through and ended up maintaining this level. But in general, all price is doing is going in between these zones. I know I've said it in one of my videos previously, but I know it's always good to keep saying stuff because you guys can kind of understand it a lot better that way. Even if we drew this up, you can tell price just kept going in between these areas, like kept going in between these areas, kept going in between these areas. And this is just what was happening the majority of the time. Like, and this doesn't even involve, this is just one of the higher time frame charts. Like, you see all this rejection up in that area. Then it came right back down. And this is how I just, it kind of helps me to just draw it out. So you just know what exactly price is doing. It'll really, really help you and give you some insight on what's happening next. This is why I love doing it. I've seen a lot of great traders use this particular tool. And this is how I understand what's happening with price. This is the polyline. And you can see just from me drawing it, price just continuously went from zone to zone. Boom, off of this, big move, came up, came through, stayed in this area right here, came through, retested this area, broke through, came down here, back up. So primarily, price is heavily in these areas, like in general. Price is heavily in these areas. And this is what you want to kind of get an idea on. Like, all right, you got to look at your whole chart. Like, what is price doing at this particular area? Like, what am I missing? What am I missing in this particular area? And you can see it. Even if I were to make this, can I make it a different color? Let's see, or even if I were to brighten it up a little bit. Nah. Sorry, y'all. Whatever. But you can see what was going on. This whole area. But this is a whole range. A whole range. You can look at price. Even if I were to measure it from the bottom all the way to the top. It's almost a 500 pip range. And this is just constant. Like constant. See, from there to there. Almost 500 pips. From here to here. Almost 500 pips. Like 400 something. And this is why they actually measure things on a daily basis to understand what's going on with price, to understand where you can get at. Because if you got in any of these areas down here, you could have got in and been able to take price up in that direction. So even if I were to take off this, guys, and what I'm going to do this so you guys can see, this is why the Fibonacci is so helpful. Even if you have a default Fibonacci and you don't have the same Fibonacci levels as I do, it does not matter. You can still measure this out. So what I would normally do is in this particular location, this is how you can get entries. So this is all in one pair. I'm not going from pair to pair. This is all in one pair. Literally, if I took a Fibonacci retracement, taking it from up here, from down here, from this swing low all the way to the highest high, which was this level. And even if I were to replay this, this is where price was. This was created, and you can see, and this is how you can get in, when price breaks, and it goes into a reversing, and there's like a trend reversal. You can kind of like minimize this level. You can go down to the other time frames to see exactly what's going on. And you see price did end up breaking this level. But, even if we really were to get into it up here at this particular level, you could have had your little counter trend line at this particular level. And it just depends on how confident the person is. Because price did break right here. See, it had, and let me do this for you guys as well. So it had right here, and this is how you want to narrow down price every single time, guys. Like, this never changes. Boom. Oh my gosh, I'm so sorry. Boom, right here. Boom, the structure broke. Same dilemma, guys. Same thing, even on the lower time frame, you could see what was going on. And this is just the H1 chart. I haven't even got to the 30-minute and all that. But this is just structure. If you can understand when price is making a series of higher highs and higher lows, you can really have an advantage on the market. And you can see exactly what went on. And price did end up breaking this particular level right here, which is very, very important for us right here. You can see that easily on the H1. So traders could have got in at a number of positions on this particular location after price would have broken right here, or it's showing, because let's actually, what I want to do for you guys is actually, let's zoom in on this level even further, and let's see exactly what's going on. Okay, I want to make this a different color. I'm feeling it. Let me make that a different color for y'all. And we are going to zone this down a little bit, okay? All right, so if we go ahead and delete this pylon, so you guys know what was happening. It was making a series of higher highs and higher lows. So you would have been able to eat off this entire trend, but as soon as this broke right here, then you would have had another opportunity. I'm gonna show you exactly where you would have looked for. So I like to look for my opportunities on the 15-minute or the 5-minute, but mainly the 15-minute is where I like to get my entries. 30-minute and the hour one is where I can kind of analyze structure to understand what is going on for these particular trades. So right here, it did end up breaking at this particular location. This candlestick did close, so boom, I got one confirmation already. This is a confirmation right here. After price broke this right here, I could have entered in on the sell down here if you know I was confident, or if you were confident, you could have entered right here. If we go to the 15-minute, you can see that little area was just a retest. This little area that we just saw on the 30-minute, and let me bring this arrow. This little area right here. Remember, the lower, I want you guys to remember something. The lower you go in the time frames, the higher you go in the time frames, the more wicks you see. Just means on the lower time frames, you'll see actual candles. So right here, we can actually see a candle that was actually going on right here. And this is actually where I probably would have entered at. You can see this was a clear retested structure at this particular location. 30-minute structure was right here, but you want to include everything. So right here, this was actually a level 2. This was a level. Even if we put on a line chart, you can see price was a resistance and a support in this level. So you have to get so technical, it's crazy. Like you get to get so technical to the point where everything makes sense. It just makes sense. These wicks don't just stop at areas for no reason. Every wick, every body on the candlestick counts. Everything counts. Just like I just monitored that on the 30-minute structure, you can see that's where it was rejected. After this candlestick would have closed, I could have got in on the second candle if I wanted to when it came up right here. Or if I wanted to and I was just confident, I could have entered in right at this area right here and had my stop loss above the highest wick of the level that was previous. This is how you can get small stop losses just by you understanding where price is on a particular area at a particular location. You can take advantage of this kind of stuff every single time. And you see prices going up. For all my 30 pip trip traders, you would have been done for the day. For all my 20 pip trip traders, you could have been done for the day with that move if you wanted to. Not really the best risk, but people just they're willing to do that, take their money and go. Or for everybody else, for all my intradays, you know what I'm saying, you want to stay in, at least get 50 to 100 pips. You could have stayed in longer and you could have taken this to the next level, because we've already marked our higher time frame levels, our significant levels, so we know where price has the potential of going. So you had an opportunity right here. We're gonna break this down even further. Trend line broke right here, and then it's just giving you extra opportunities. After this trend line breaks, I'm gonna show you guys. So if I were to let's say you were just seeing at this, because I know you guys get in these same sort of situations when you're trading, and some of you guys may sell right here, but I'm gonna show you why right here is probably not the best idea. Right here is probably not the best idea to sell, simply because of this. Watch. So if you got it right here, now you got your stop loss, and stop loss could be still behind this level. I'm just say behind that just to be safe. This is where things get a little bit interesting, okay? So let's say you're on the 15-minute and price is rejecting there, you get in down there. Price always does this. It ends up doing this and it starts coming back, but now you've already experienced 16, almost 20 pips in drawdown right here. About 17, 18 pips. But what happens is price could come back to these levels from the very beginning. So you want to kind of weigh out your options when you're doing this. You want to weigh out your options. So right here, if you would have got in, price has the potential of pulling back to the 38.2 to the 23.6, which is really a risky level. This is just a continuation level in general. It could come back to the 50, the 61.8, the 78.6, the 88.6, and vice versa. But this is why you see where my stop loss was. My stop loss was behind here at the very, very beginning. And that's still my projection, because with this, it's still a little bit risky. You can either, if you, let's say you did enter here, I mean, your best bet was probably to either have a wide stop loss back here, still behind this level, back behind the trend line and everything, or you could have just placed the stop loss to, you know, skip. You could say, let's say you entered in right here, you skip the 23.6 and place your stop loss behind the 38.2. Or if you entered at the 38.2, skip that Fibonacci level in between, which would be the 50, and put your stop loss near the 61.8. That's how you kind of want to weigh out your alternatives, especially if you're entering down this low. But at this point, I probably wouldn't have gotten into the market. I'd rather catch it early at the very, very beginning when the price starts, that first retest happens, and then I can get in. If I get in down here on any other level, it's a little bit more risky at that point. You're going to have to tone down your lot, and you're going to have a wider stop loss to where, you know, price is not going to hit. Me personally, because even if you put your stop loss still behind that level and you entered in down here, yeah, you could have the potential of being in a lot of drawdown. If you were comfortable with that, you could have done that. But at the same time, our main level that we're trying to reach is 86 pips. So that's like a 1 to 5 right there, which is not too bad. Or you could have taken it, you know, to the next level. But price is probably going to do something big at this level. You would really have to monitor this once price gets down, which we'll go over in a few minutes here. So this is how powerful the Fibonacci is. This is what you're measuring. You're measuring your alternatives. You're measuring what the probability of you taking the trade would be. That's what you're mainly measuring. What are the probabilities of me taking this trade at this particular position to where it won't hit my stop loss? Or how much of drawdown am I willing to risk before I take one of these opportunities? So you want to keep that in mind every single time when you're getting into the trades. And you see at this particular location where you would have entered at, you see, let's go ahead and play this out. Thank God it did not put us into some serious drawdown. We only went back almost 18, like I was saying earlier, almost 18, 20 pips in drawdown, which was not bad. At the same time, this is still a significant level. It did wick right here, so you would have wanted to really understand that this area right here is actually a significant area. It didn't just wick there for no reason. It wicked there because this was a very, very significant level. Even when I bought the line chart out, you can tell this was a resistance and also support, resistance, support, and so on. So it goes all the way to the right side of the block. So you can see that. And price is still going down. And this actually is a great, great trade in general. I love drawing these sort of trades up, man, because it's like, I mean, this is amazing, man. Even if we go to the 4 hour, you can see what happened. Price generically dropped right here heavily. And this was a big, big move that was taken. And you can just follow the trade, because if price is not giving you a reason to pull out, which on the daily was showing heavily that bearish, that sellers in the market, hour 1 sellers in the market, 30-minute sellers in the market, and vice versa. But this is how you can just kind of get the trades in. Even if you wanted to take profit down at the tip of your trend line, you could have done that as well too. But we want to go to this next level right here. So boom, we're gonna play it out. Boom, it ended up coming down, and you see it's starting to reject this level, but it's not going back in our direction. On top of that, even though we were at this particular level, you want to really understand something right here. That even on the 4-hour, price is still bearish overall. So it's not giving you a reason to actually pull out of the trade, which is amazing. Because even though this candlestick would have bought a little bit, this big old candle, this big old bearish candle is giving me enough information to help me understand that, you know, there's enough sellers to keep this market going down. So because of that, this whole area would have gotten broken down for me. And you can see it did end up rejecting this level, which was another area of price action right here. And this was a huge move, man. This was a very big move. If I went to the H1 chart, I could have just dragged my Fibonacci down some more if I wanted to right here. And you can see it still stayed below the 23.6 area, which is very good. As long as it stays below 23.6, it is a sign of a continuation. So this is a very great trade. So as it keeps going down, and you're literally like scaling this in, you're already up like 100 something pips. And you see all this is happening throughout this area as well too. But throughout this area, and I'm going to go ahead and delete this so you're not confused, price is still heavily bearish. It's heavily bearish at this point. Heavily bearish. So it's not giving us a reason to get out of the trade. Yeah, right here, you probably would have been worried a little bit when this started to do this. But because we could have eyed this down and been like, okay, if this candlestick closes like this, I still have reason to stay in this trade. You see this candlestick close, and all of this was under that significant level of ours. So me personally, I would have stayed in this trade. And I'm giving you guys a lot of sauce right now. Like, I didn't show you, and this is all off of one pair. Like, I could have easily scaled more entries if I wanted to, especially at this area right here. Because if I were to break down this whole area in general, I would have went down to the 30-minute, and I could literally see what price was doing right here. Even if I were to, let me see if I could draw kind of trend line right here. This probably would have made me a little bit nervous though, as you know, it kind of broke through here. But at the same time, you don't have to draw the trend line like that, especially how the price is right here at this particular location. This was a significant area in general. And this was as well too. This is actually an area of price action on the 30-minute, according to structure. And you see, oops, my bad, guys. And you see right here in this area, oops, let me delete that line. Right here in this area, it did try to come through here, but both of these candles did not close past this area of importance. Right here on the 30-minute. So this is how I break down the time frames. It did not close past this area. So right here, it did not close past that area. So just for me seeing that after this candlestick would have engulfed, I could have easily taken another opportunity right here on this candle. If you wanted to, you could have taken the opportunity right here on this candle. And then I probably would have just placed my stop loss behind this area, this next high up here, which is right here. So right here, you could have scaled in another entry. And yeah, it would have been going up and down, but still, that's just part of the game, guys. You can't be afraid of that. Like, you can't be afraid of that. That's just how the market moves in that particular area. So you want to really understand that when you're trading. And we already see what the 4-hour candle is doing. So this could potentially go to the next area. So then at that point, this trade up here is either risk-free or you didn't pull out profit. Or we have the ability to catch more pips going down the line. And this is just how you monitor these trades. You could have moved this stop loss to this area as well, just to have this. So where if this were to hit, you know what I'm saying, you're either breaking even or you're in profit. So depending on how much money you're up. And right here, it's still going down, and it's still going down, and it's doing the same exact thing. And you see, and I just showed you guys how to maintain a live trade, man. This is like, this is crazy. 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 This is crazy important. This is crazy, man. I didn't give you all the sauce. Look how that bearish candle is still going. So it's still giving us a reason that we will find towards holding this particular position. So this is great information, man. And it just keeps going down from there, guys. So you guys can see what was literally going down. After this, seeing that bearish candle, I would have been able to take another opportunity right here as well too. After this candlestick had closed like that, I could have taken another opportunity to scale another entry. Or if I wanted to be safe, you know, for the second, for this opportunity as well, if I wanted to wait a little bit longer, I could have waited for price to break past this level, which it did. Two candlesticks closed past this level. Wait for the retest, which was right here, and then I could have scaled in another entry after this bearish candle closed, and I'll get in on this second candle right here, and then stop loss behind this significant level that we had that it just passed. Or if you want to get tight with it, I mean, you can. I mean, it's a little bit risky right there. Could hit, but it's just on you. But just to be safe, I'll probably put mine up here. Something like that. And you can see, like, even if I were to drag my Fibonacci down, you can still see what's actually going on. Let me see. My bad, guys. Let me get this for you guys so you guys can see it. Right here. Oh, shoot. Oh, I can't find it right now. We're not going to worry about that. See if I can delete this for you guys so you guys can see. I'm going to delete both of the fibs so you guys can see. You see, and remember, we started up at the top, right? And as you can see, every single level that it hit, boom, when it made this lower low right here, stayed below the 23.6, continuation. Right here, the next level right here, stayed below the 23.6, right here. And then the new level, which was down here, it came and hit the 38.2, which was still a valid level. If it would have broke the 38.2, it probably would have been the time to really pull out, because this thing might have the potential of reversing. But because it stayed below 38.2 and 23.6, this whole trade was valid for me in general. Right here, this one came down here below the 23.6. So all of this is a sign of continuation below 23.6. Below 23.6 means continuation. So you guys want to keep that in mind. If you use the Fibonacci, some of you guys strictly may have been able to analyze this and go with as the zones were going. So you want to keep that in mind as well too. Just, you know, really consider structure. Structure is so important, and you can see this is the next projected level that I could have been at if I wanted to. But some of you guys may not be the people to hold this long. Like, this is a lot of pips, a whole bunch of days, weeks even. So I mean, that's a long time to hold. But you can see, you know, as price continued to go, it was always fluctuating, doing different things. But, you know, at this point, you know, you could have been done by this move. You could have pulled out your profits at this move. But it still rejected that significant level, and it continued to go down to do the same exact thing that it did at the very beginning. You see, we have the same sort of move, just like the very top. Look at this. Same exact thing. After this would have broken, I would just analyze this the same exact way. Right here. After this would have closed right here, I could have, you know, literally go down to the 15-minute, and I could have taken the trade once again the same exact way I took the other one, which would have been off the retest. So I would have got in right over here. Stop loss behind the last wick, last wick of the last high. And I would have been able to take this trade down to the next level. So now you guys see the importance of trading one pair. Just by me understanding where GJ was, this was a lot of money, a lot of moves. There are a lot of moves within that one pair. You just have to be able to find them. And if you can find them, you can make a lot of money off of one pair, I promise you. You'll literally have moves every month, every week, just about every. I'm not gonna say every day, because sometimes you really have to wait for price to show you something before you get in. And right here, this was a great area for price at this particular location. And even if I did the default Fibonacci, guys, you don't have to have my Fibonacci levels. Like, I want to show y'all something. You don't have to have my Fibonacci levels to see this. You could have, let's go to the default. Let's go to the default. Default Fibonacci, right? This is the one that everybody has. This is the one that everybody has. And I'm going to take this off so you guys can see exactly what's going on. Okay. Fibonacci from the top right here all the way to the bottom. And you can see right here, it did end up hitting the 50% level. It hit, and once it's closed right here, I probably would have waited for this candle, or if you're confident, you could have got in on this candle as it was active, or you could have waited for this thing to close and got in on the second candle. And it is the same exact thing, guys. Stop loss behind this level. If you really, you know what I'm saying, want to give it some room, or if you really think it's not going to retrace even any further than the 50 or the 61.8, you could have put your stop loss behind the 61.8, around the 78.6 level, and then just called it a day, and then had this thing headed for this level, higher time frame level that you got marked. Or if you're that person, you're going for 50 pips and done, you would have been done with that move right here. Or if you want to go for 100 pips, you could have gotten down here and just, you know, monitored the trade. But the more you are in the trade, guys, you got to remember, the more you want to, you know, the more you're going to have to get technical, because if you're holding a trade, you got to be like, okay, well, where it's at right now, why is it here? Why is it wicking here? Oh, okay, this was a support level, and now it's turned into a resistance level. Okay, that's why. Okay, now that's why it's wicking right here. So it might end up staying, price might end up staying at this particular location. Okay, now let me draw my Fibonacci, because it just made another lower low right here. So let me go ahead, go back to the Fibonacci. Let me go down and move it right here to the bottom of that wick, that bearish wick right there. And let's see, okay, let's see if it stays below the 23.6 and the 38.2. Let me see that. Okay, it stayed, all right, it stayed below the 23.6. That's good. Now we're even good. Now it's a sign of continuation. Okay, it spiked here. Okay, now it's looking bad, because we just broke the lower high that was created right here. Now price has the opportunity of reversing at this point. So you actually, it didn't end up making it to this level that we wanted down here. But, you know, we could have closed out here after we would have saw an engulfing candle, or, you know, this candle. After that candle, I probably would have closed out, because there's no sense of holding that at that point, because it's literally showing you that it's ready to go back in the other direction. And you see it did, and then it would have taken you out at break even at this point. But structure was broken right here. Structure was literally broken right here, guys. Structure was broken right there. That's where structure was broken. And even if we drew the polyline, you could see exactly what was going on, guys. Consolidation at its finest. Consolidation at its finest, guys. Right here. And this was the retest of these levels, guys. This was the retest of these levels. You can see it. And then we continuously go in that direction. So, but yeah, man, that is actually how you analyze a pair, man. This is how you do it, and this is how you want to do it every single time. And this was in an uptrend, obviously the trend line would be going down, and I would be trying to get in. And remember, we knew exactly what price was doing from the very, very beginning, because we narrowed it down right here. But even if you wanted to draw, you got to remember where you are. This was the counter trend right here. And now, you know, even if I were to draw my Fibonacci from here all the way to the top right here, that wick, you can see that price just came back down to the 78.6 level, and allowing us to go back to the upside. And watch what happens if it keeps, you know, if it lets us stop here. right here, but it never broke this area of structure. So that's even another sign for us to understand what price is doing. You can see this is actually an area of price action as well too. And you see, man, I keep talking, man. Like, I just be getting excited with this kind of stuff, guys. I know this video may be long, man. See, that is the area right there. You can see exactly what's going on. So when you combine price action with your Fibonacci levels as well, you could do so much, man. But other than that, man, I'm going to go ahead and get off of here. That is beautiful, man. That is really beautiful. We just caught the 78.6, and we caught the break of the trend line right here too. And man, it's just, after that, that's absolutely amazing. That is absolutely amazing. GJ is amazing, man. But that is it for this video, man. If you enjoyed it, you already know what to do. Make sure you guys do drop a like, man. Leave a comment. Let me know what other stuff you want me to see. If you want me to go over any indicators, I know I had a couple people ask me to do some indicator videos as well too. I got those coming. I promise. I have not forgotten about you, man. You know, I put my all into these videos, man. I just dropped a ton of value on you guys. So, you know, leave a like, man. Comment, subscribe even, man. I appreciate all of my supporters. I've been putting so much work into these videos because I know how trading can be, man. It is actually very, very simple, man. Once you understand your technicals and really understand how the market moves, things get a lot better. I'm telling you. But other than that, guys, I am out, and I will see you in the next video. Peace.